Hello and welcome to episode 4 of the Founders Spotlight by BrightTALK. Today on the show is Oren Kaplan of SharingAlpha. Oren, welcome to Founders Spotlight.
Hi, thank you for inviting me.
Perfect. So, Oren, you founded Founders Spotlight. I'm just going to do a quick intro about myself. My name is Ryan Ross. I'm the community manager at BrightTALK for the investment management community. I worked at Dow Jones and Financial Times. I have a Claritas investment certificate from the CFA Institute and a certificate in disruptive strategy from Harvard Business School's HBX program. I also host regular podcasts, Lending Times, Blockchain Times, and the Fierce Focus Show, which is about entrepreneurship. So this fits perfectly into the conversation that we have today for Founders Spotlight. A couple things about the BrightTALK system that allows us to ask questions. If anybody in the audience wants to ask a question, please do so below, and we will answer the questions at the end of the interview. Another cool thing that BrightTALK allows us to do is vote. So I want everybody to, if you can, throughout the presentation, if you can vote on who are you, who is listening in the audience, or if you're a fund selector, an entrepreneur, an individual investor, please identify yourself so we can figure out who we are speaking with. I will keep this open for about a minute to see what we have. And in the meantime, I think we can get started to talk to you, Oren, about how you started SharingAlpha. So I kind of want to start at the beginning and say, where are you from?
Okay, so I'm based in Israel. Together with my co-founder is actually my brother. We're here at the Startup Nation. It's actually 20 degrees and sunny outside, so there's a big positive of being based here. I hear it's snowing in London. So I've been based here since I graduated college. So I've got 20 years now of experience in the industry.
Okay, and so in Israel, you kind of think of Silicon Valley as the startup place. Israel, I guess it's burgeoning as a startup area, and I'm wondering, well, when you guys grew up, what was the environment that you grew up in that kind of gave you the entrepreneurial bug?
Well, first of all, in Israel, unlike other places globally, there is this mentality of just trying out things, and people don't see failure as such a disaster. So there is this mentality of doing things. We didn't really have a choice. I mean, the country was established 70 years ago. If we had to do things. My parents didn't inherit a country and organized establishment, so they had to do things, and that's kind of the mentality that you grew up with, of doing things. And then at the age of 18, everybody joins the army, men and women. So you spend 3 years in the army. You get you're responsible for things which sometimes are very crucial. You learn to work in teams. You're educated to be more responsible, more mature. So I guess that all these ingredients led to the situation where Israel is number one in terms of number of startups per capita. R&D budgets are very high and so on. So this is the story.
So, in your career, I was looking on your website, and it says you've been busy in the financial industry. Tell me about the trajectory of your career up until when you started SharingAlpha.
Yeah, so I started out working in a trading room. I actually became the youngest trading room manager at the age of 28. There was a small trading room that I started managing, and then slowly developed into becoming a consultant, helping out corporates in terms of hedging their exposure to foreign exchange, interest rates, derivatives, all kinds of commodities, all kinds of market exposures. I became partner in an asset management firm. Now it's the second largest in Israel, doing all kinds of roles there. And in the past 2 years or so, working on SharingAlpha, working on this startup, basically taking lots of things that I've learned through this path in the industry and trying to make things better.
Mm-hmm. And I was reading on your website, it says you figured out many times what is missing from the institutions that you worked for. How did you, what process did you go through to figure out what was missing?
Yeah, so I get bored pretty fast. So after 4 years in a post, I try and find something else to do. That's kind of my nature. So when I started working for the largest bank in Israel, Bank Hapoalim, and after 4 years, I decided to leave and open up a dealing room for a smaller bank, and then move from there to an asset management firm, opening up a dealing room for them. And then I opened up a few subsidiaries as part of that asset management firm. So that's kind of what I like doing, opening up new businesses, finding out opportunities in the markets. I get less excited managing. I used to manage 70 people, and it's not what I like doing. I prefer doing, building up new businesses. And doing business development. That's kind of my thing.
So basically, you get bored and you're like, how can I find a way to bridge some gap, right?
Yeah, and that's how I came up with SharingAlpha. Is basically as a result of being a user or someone in the industry that saw a gap in the industry and decided to build up a new startup. I don't believe too much in people that come out of nowhere and say, okay, I'm going to improve this industry, or I've got an idea of that is outside of their experience. I think that the best ideas come from people that are actually, very well, have the right experience, the right knowledge about the dynamics of that specific industry.
Okay, so you're saying that, so you guys worked at an asset management company, right?
Mm-hmm. Yep.
Okay. And what was the gap that you guys saw, or that you saw that needed to be filled?
Yeah, so fund selectors or investment advisors, unlike fund managers, lack the possibility of building up their name in the industry by creating a proven track record.
Sure.
So if you're a fund manager, you can become a superstar and you can be rewarded accordingly. If you're a fund selector or investment advisor, there's no way for people to know whether you actually add value, and it's not personal as it is if you're a fund manager. So we invited these fund selectors or these professional fund buyers to come onto our platform, to the SharingAlpha platform, and build their own proven track record in terms of both fund selection and asset allocation capabilities. The way this is done is they come onto the platform, they select a group of funds they wish to rate in terms of their chances of generating alpha in the future. Later on, we compare the ratings they assign with the actual performance of the funds, and in case there's a match between their ratings and the actual performance, they receive a higher ranking. So they, meaning that they've exhibited an edge in terms of their fund selection capabilities. In a similar fashion, we asked them to construct a virtual fund of funds on the platform, and we later rank them in terms of their performance, the performance they've achieved. And as a result, they end up with building an asset allocation track record simultaneously. And the reason this has been successful, and we've managed to grow in terms of our member base, number of our members, is the fact that a long-term track record will become a valuable asset to hold. So there's this time element. It's not like a new feature or a new gimmick, a new some kind of some new technology that came about, and only early adopters, people that really like technology, start adopting it. Here, the sooner you start, basically, the better, because the ones that started early on will have a long-term track record to exhibit, and therefore there's an incentive for them, a motivation for them to start early on, which is also obviously helpful for our business.
Okay, and I was reading on the website, it says you guys went live in April 2016, and you've become the world's largest fund rating platform in terms of number of fund analysts contributing to its ratings. So two questions off the back of that. The first one is, the next line says you have 1,350 vetted fund professionals. How do you vet the fund professionals?
Yeah, so we basically leveraged on LinkedIn, a platform that is used by, I'd say, 99% of our audience, of our members.
Yeah.
So in order to make it simple and in order to be able to vet people on a globally, we basically look at their LinkedIn profile, and if they deal with fund selection as part of their day job, and they have an active LinkedIn profile, not someone that just set it up 2 days ago and has one connection, we would treat that as we would treat them as vet them as a professional fund buyer. In terms of our we launched, as you said, in April 2016. That's after just less than actually 6 months of development.
Yeah, that's quick.
Yeah, we decided, to launch as quickly as possible. We didn't want to have the perfect product before we launch. We later obviously added, further functionalities. We've been, ongoing development.
What was the first functionality?
The most basic one. So you could go on the platform, select the funds, and rate them. That was the number one thing that we needed, obviously, in order to launch. So for people to basically allow them to start building up a track record. So we have people that have a 2-year track record now. And we wanted to receive feedback from our users. We wanted to, because there were people that said, nobody will join, this motivation, is questionable. You're not paying them for their efforts. Why would they share their opinions, these professionals? Why would they share their opinions on the platform? So we wanted to make sure that our idea is in the right direction. We didn't want to go and spend 3 years in the lab, and then come up and say, well, nobody's joining. We have it's user generated, so without users, you don't have nothing. So we wanted to make sure that we have users early on, and then we can, based on the feedback that we received from these initial users, we could develop further. And I strongly believe that you should not wait until you have the perfect product. That there is a lot of startups are founded by technical people, and they have this, they're freaks of new features and the best features, and they never go to market. And most startups fail not because the product is not perfect, but because there's no traction. That's the number one problem. So we wanted to make sure that our marketing strategy is in place, and the sooner you start with that, you get the word of mouth going, the better. So my philosophy is develop the most basic version, start getting user feedback at an early stage. The only thing that I think we did pretty, probably too early is we started speaking to journalists from before we even launched. So we got the Financial Times to cover our story with a headline, SharingAlpha, where Morningstar meets TripAdvisor, but we didn't have a website. So it was great. It was great to have a boost of encouragement that our idea is of interest to such a widely read publication. But we could have enjoyed plenty of traffic to our website if it was only live. So that was a big mistake in terms of our PR strategy. But we were tempted to get feedback. It was an idea that boiled in my head for years, and I wanted to see that people are, I'm not the only crazy guy that thinks it's going to work.
So that fits perfectly into a question we've just gotten from the audience that I'll plug in here. The question is, what are some of the most difficult challenges when it comes to adoption of the services? So you guys had all this traffic, and that's great, but were there challenges when you were trying to get people to use the functionalities?
Yeah, I'll tell you a story which I never told before. I mean, we had a problem with the sign-up when we just started. We saw that there was actually a bug, and some of the people that tried to sign up weren't able to do that. So that's part of life. I mean, that's part of your any startup. There's no new website that comes out, and it's quite a complex website that comes out without problems. And I can tell you, we had some sleepless nights. And there was a lot of tension towards launch, but launch is a continuous process. I mean, every week we launch a new functionality. We discover bugs. We have to fix those bugs. There's things that we thought would change, would be adopted by many users, and we found out that there's no traction around those functionalities. So it's a continuous trial and error kind of way of life now. Yeah.
Yeah. So this is a question about expectations. When you're building, I think there's a phrase in construction, right? It takes twice as long and twice as much budget. So for you, what took longer than you expected, and what didn't take as long?
Well, it's still taking, some things are taking longer than we would expect. When I speak to fund providers, the fund managers about SharingAlpha, sometimes I get, most of the times I get people that I'm speaking to are really enthusiastic about SharingAlpha. They find it as a very useful tool for them as well to interact with potential buyers, and they think it's a great tool for them. But internally, they have, we're talking about firms that have thousands of employees, very large departments in terms of compliance and regulation, and sometimes it takes much longer than you would expect for them to make a decision to take this on board. Some of the things that we offer them are really no-brainer. But it's a very conservative market. These are very large organizations. It's not selling products to retail clients. You're selling it to large organizations. So these things take sometimes more time than you would expect. But if you would ask me 2 years ago, in terms of the numbers, in terms of the usage, I wouldn't expect it to be such a great success. So I'm quite happy with the progress so far.
So how have you measured the success?
Well, again, it's a user-generated platform, so everything is, we just supply the technology. All the ratings, all the comments that have been written about funds is all driven by our users, the virtual fund, the funds that they've built. This is all done by them, and we're not paying anyone. So we don't have any fund analysts on our payroll, and we have, close to 1,400 now. So it's amazing that we've managed to gather this group of professional fund buyers. These are people that are, very difficult to get hold of. We're not talking about retail end investors. We're talking about the people that advise others on which funds to buy, and we have them on the platform, basically sharing their opinions, which is awesome. That's how we measure success. If we had great technology in place, lots of features, but nobody using them, then I guess it was a big failure. Although we've managed to develop things, in terms of traction, we would fail. So that's the way we measure things.
Okay. What were some early wins? You guys, first maybe it was the Financial Times article. So you had the idea for a couple of years, I think you said, and then you and your brother, I believe, started building the prototype. Was there a specific point where you're like, I think this could actually work?
Yeah. So as I said, we decided to focus our marketing efforts on selecting strategic partners that would help us offer us added value. That's the way we saw it working. We didn't go and raise capital from venture capital. We said, let's look for strategic partners. And we managed to secure a deal with Incisive Media, which is one of the world's leading B2B information providers, and with Open Door Media, which also focuses on our target audience. And this was a key achievement that helped us in building our initial user base, because you have to have hundreds of users from in the first few months, because if not, people kind of lose faith in this whole idea and don't want to contribute anymore. So having these two partners on board, helping us in different events and publications and ads and stuff, that was super important. And I strongly believe that strategic partners, not the capital that they can offer you, but the connection to your target audience is critical in supporting growth of startups. The sooner you manage to reach such deals, the better. And again, most companies fail as a result of lack of traction, not as a result of failure of developing a product. Therefore, marketing and sales expertise is important as the development of technology. And sometimes startups focus on the technology side, because some of the founders are from that background. And I think both are as important, and sometimes even the traction is even harder to achieve, because technology development is something which is you're less dependent on others. It's dependent on your hard work and the talent of your people. But traction is dependent on other people. Decisions process. So you should focus on that from the very early start. From the day you start thinking about an idea, you should say, okay, how do I get this idea across? There's so many great ideas out there, and how do I get my potential users, my initial users, how do I get them on board from day one? That's the tough question to answer.
Is that a combination of user experience and then just value, or what are the components of that value to the user?
Well, you need to have a great idea, and you have to have a good product that will add value to them. Without that, it's even if you have a great strategic partner, and even you manage to raise millions from investors, and you can spend them on marketing. If your product, if your idea is useless, then obviously that won't help in the long term, because at the end of the day, your customers will just will try it out once and leave, and there won't be any word of mouth dynamic going on. So that's the precondition. But even if you have a great idea, even if you have something that is, and it's the right timing and everything, if you don't have the right strategy of getting the message across and helping people share that idea further, then you'll need too much money to support your business. You'll need to spend money on advertisement that you don't have as a startup. You have to think of a clever strategy of getting the message across with a zero marketing budget. That's the challenge.
Okay. I want to talk about risk. Fund managers think a lot about risk, but this more in the entrepreneurial sense of the word. What are the riskiest things you guys have encountered in launching and growing your audience, and how did you kind of trudge through those risks or manage them?
Yeah, so I think that's an important point. I mean, we're offering a new concept to a very conservative industry that and there was this risk that I mentioned, that professional fund buyers will not participate. A lot of people were skeptical and said, these people won't share their ideas and this won't work. It's not. Some people, I still hear it from them, and they still question whether this will continue growing. So that was the main risk, and as I said, being a user-generated platform with no users isn't such a great idea. So we were fortunate that after less than 6 months from launch, as you mentioned, we became the world's largest fund rating agency in terms of the number of fund analysts contributing to our ratings. So I guess that risk is behind us. There's many other new obstacles that we need to overcome, but the initial one, the most important one, I think, is we can now say that kind of the proof of concept stage is behind us. We're still facing a long road, but we're enjoying the journey.
Okay, and in the past you've mentioned that the wisdom of crowd works, and I think the wisdom of crowd also, that's what created the financial crisis. So how do those two theories reconcile each other? Yeah.
So we need to distinguish between two types of crowd behavior. I mean, there's definitely an issue with herding of the masses, as we recently seen with cryptocurrencies. But assuming opinions are collected in an orderly fashion, the way they are on SharingAlpha, it has been proven time and time again that the wisdom of the crowd works. My favorite example that proves that wisdom of the crowd works is the results collected from a game show that you probably know of, Who Wants to Be a Millionaire?
Oh, yeah.
And as you recall, during the game, participants are offered to ask a friend who they consider to be an expert, or they have a chance of asking the audience. The crowd is the audience, basically, in the studio. And the data that has been collected, the researchers have been following and collected the data from all of these shows, and they show that in 65% of the cases, the experts came up with the right answer, and the crowd turned out right in 91% of the cases.
Huh.
So the crowd, this is a great example to show that wisdom of the crowd works, and I can compare this to what we're doing on SharingAlpha. You have firms, rating agencies, the traditional rating agencies that have one single analyst meeting the fund manager, analyzing the fund, and coming up with a recommendation of whether to buy the fund or not. What we do on SharingAlpha is we bring numerous opinions onto the platform and combine them together and show our users an average rating of our users, and because we're ranking as in different concepts than TripAdvisor and Yelp and the others, we actually rank our raters, we don't use an equally weighted average of the ratings that have been assigned. We use a weighted average. So those that have a higher ranking, that have a proven track record, receive a higher ranking, a higher weighting when we calculate the average fund rating. So we don't even, we're using wisdom of the crowds in a turbo fashion, if you like. We even give more power to those that have a higher ranking. So we think that it's a very robust and powerful mechanism. Yeah, so that's how I think. There are cases where wisdom of the crowds suffers from, or crowds suffer from herding behavior, and that's very dangerous. But there are definitely cases where wisdom of the crowd works. And in this case, I don't think there is any alternative, because, as I said, the traditional way, you have to understand, the traditional way that funds are rated is not scalable, because you have over 100,000 funds out there. That's more than the stocks and bonds that are traded globally. And you have the largest team of fund selectors out there they have about 100 fund selectors. That's all. Most of the teams are less than 15, 10. Very small teams that work in silos that cover funds, and they're supposed to cover hundreds, more than 100,000 funds on an ongoing basis. So there's no, if you want to enjoy the power of qualitative analysis and not just base your ratings on past performance, which hasn't been proven to work, then you have to use some kind of mechanism where you join forces together and bring everyone to share their ideas, and using a platform like SharingAlpha basically enables that. And you see examples not only in the travel industry like TripAdvisor, or the restaurant industry like Yelp. You have a company called eTour. It's actually an Israeli company, or Estimize. They're based in the U.S. They also are in the financial world. They also use wisdom of the crowd in order to improve financial ratings and market predictions. And SharingAlpha simply uses similar methodology in the area of fund ratings. That's our unique spot.
It sounds like there's a book by Daniel Kahneman, and it was Thinking Fast and Slow. It sounds like the type of thinking that drives financial crisis that's the thinking fast, right? That's kind of the gut reaction, whereas the thinking slow, that's the more methodical. That's the type of thinking we're talking about here. That's the wisdom of the crowds from a more methodical way, more right brain way, more analytical. Yeah.
Yeah, exactly. I think the book by Daniel Kahneman, actually ex-Israeli, he lives abroad, but he grew up in Israel, speaks about these two mindsets. He did a lot of work with his colleague Amos Tversky, who didn't win the Nobel Prize because he passed away before the announcement. But they did a lot of original research that revolutionized the economic theory, which assumed that humans are rational decision makers. I took a lot of inspiration from their work, their collective work. I mean, we have. In his book, this bestseller, he talks a lot about how they came up with ideas. They did these long walks together, and my brother and I speak on a daily basis. My brother is the co-founder of SharingAlpha, on a daily basis, and try to come up with ideas and solutions to all kinds of things that we come up. And I think. I think developing a startup or developing new theories, it's always good to have at least one co-founder to brainstorm together, and leads to much powerful and outstanding results. I think that's the way. Not building up an idea or a startup without having someone to share ideas with and brainstorm is very difficult.
So I want to talk about a book that you wrote in a second, but we have another question from the audience, which is talking about how you acquire fund selectors. What's your method of finding new people to rate the funds? Yeah,
so I'm very active on LinkedIn. I've got close to 25,000 connections now. Most of them are professional fund buyers. So in a similar fashion that Instagram and Zynga and leverage on Facebook. I'm trying to leverage on LinkedIn. It's a great platform. It's our target audience, as I said, 99.9% of them are active on LinkedIn, and it's a free tool. So every time you share something there, you add a link to our website. People come. I mean, we've got raters from 57 different countries. I might have visited 7 of them. So it's a great way, a great free tool to work with. I had less than 1,000 connections before when we started this venture. So it grew dramatically. My connections on LinkedIn have been very, very powerful. And there's a lot of different. As I said, we have 2 formal agreements with media firms that publish our data on a monthly basis. They find it very, very interesting for their audience because it's unique. We show the tables of the top-ranked members, the top-rated funds, the most popular funds. There's a lot of unique information that they publish. And there's about 5 or 6 other media firms that also publish these tables on a monthly basis because, they find it useful. And every time they publish it with all kinds of commentary coming from our user base, it becomes the #1 article of the week or the month. Everything is measured on the internet, so definitely people find it interesting, and that's a great way for us to grow because people read these articles. There's a link to our website, and they come through. So that's the main channels are using all kinds of PR and LinkedIn and social media. So that's the methodology that we're using.
And from their point of view, what is the value that they get from being on SharingAlpha? And you may have covered this in the past, but I just want to clarify.
Yeah, so there's 2 things now that we offer. I mean, initially we offer them to start building up a track record, as I mentioned. So they rate funds. We later rank them according to their success and their precision, basically, in identifying winning funds. They can also build virtual fund of funds on the platform, so they can build a track record in terms of their asset allocation capabilities. So that was the initial offering. Now that we have funds that have been rated and so on, we have data that we can share. We've developed different tools that can help these professional fund buyers in conducting fund research in a more 2.0 way, if you like. They can go and see what their peers think about different funds in terms of how they've rated those funds, in terms of the commentary that they've left, explaining their ratings, basically backing their ratings with commentary. So we have these tools which are free for them to use, where they can go and conduct fund research, basically complement the fund research tools that they have available, which the tools that they have available are mainly focusing on past performance numbers, all kinds of statistics about how the funds have performed in terms of risk and return, and information that the fund provider wants to present to them. But if they want to see what others think about the fund, there's a lot of private information, if you like, that could be shared. That's SharingAlpha offers that. So there's 2 reasons, main reasons for them to come on board. One is to build up a track record, and 2, in order to conduct fund research.
So it's a track record and learning about the funds themselves.
Yeah, these people are basically paid to come up with ideas on where to place their investors' money, and I think it'd be irresponsible for a fund selector, a professional fund buyer, not to be aware of what others think about the funds. If he's sitting in his room, in his desk somewhere, it doesn't matter if it's in a hub like London where there's plenty of people, but still, you want to see, what others like me, the same profession, think about a certain fund before I invest in it, or if I'm invested in the fund, I want to follow these comments. I want to follow the rating. It could give me a sign of whether I should invest in the fund or not. If there's anything I need to check out and question. So I think they all should be using it as a fund research tool. If not as a tool to build up their track record.
Okay, so we have another question from the audience. This is a bit of a long question. So when you ask fund selectors to build the model portfolio, do you measure more than just their performance? What about volatility? And then how do you compare selectors that can only use investments that are on platform or have limited investment universes? How do you compare the fund selectors from the UK, Europe, Asia, the US, and so on?
Yeah, so I don't want to go into too technical things, but just in general, we don't measure just return. We measure return minus maximum drawdown. So we do take into account a risk. So someone goes and selects the most riskiest assets there or funds, and they're totally wrong. That will hurt their drawdown. That will affect their drawdown, and as a result, affect their ranking on our platform. So their performance is measured that way, not just return. In terms of the universe, if they're limited in their real life to invest in certain funds that are registered in certain jurisdictions, on our platform, there's no such limitation. So you can go and you can build up a virtual fund of funds based on your opinion. If you work for a large institution that says, okay, I'm not going to invest in a fund that only has $50 million under management, that has been launched 2 years ago, that's a big no-no for our institution. We have to make sure that it has a 5-year track record and $500 million under management. When you do things on SharingAlpha, either if you're rating a fund in order to build up your fund selection track record, or if you're assigning funds to your virtual fund of funds, you can use your common sense. That's the only limitation there, or the only guideline. You can choose whichever fund you wish. You can go for a fund that has just been launched. You might have known the fund manager from prior experience. You might have managed a segregated account or a fund that has been active in a vehicle that was only available for U.S. investors, and now they launched what they call a UCITS fund, and then you could say, okay, I know the strategy, I can see that, I can go and rate the fund from day one. So SharingAlpha opens up, as a result, opens up the universe of ratings also to new funds, smaller funds, where in many cases that's where the chances of generating alpha are. So it's not just the large and funds that are rated or are included in these virtual fund of funds. In terms of comparing people from different geographies, we have a possibility of looking at the rankings in terms of different currencies. So that solves that issue. Okay. But again, I don't want to go into too much technical aspects. Well, we thought about these issues, and we think that we've come up with solutions. If there's any, if people are using the system, if there's anyone listening to us that is a user of SharingAlpha, and you have any ideas, that's how we've come up with many of our functionalities coming from feedback that we receive. So we're open to feedback and to ideas on how to improve things.
Is there a feature that you think, oh, this is going to be a home run, that people haven't been using, or that you've had to stop using on the platform?
Well, the stuff that I mentioned in terms of fund research, that's just of doing, basically screening out funds. If you want to look for a fund that has been highly rated in a certain category by our users, that screener is quite new, and we have what we call an insight section where people can look at comments that have been left regarding funds in different categories, and actually comment on those comments and give them a thumbs up if they think that those comments are useful. These functionalities, I think, will enjoy more and more usage as we go forward, because our main focus was, until a few months ago, was to get more people to actually start rating and have something behind that screener, because just having a screener without ratings doesn't really work. So now that we have this kind of critical mass of ratings in different categories, we build those tools that allow people to do fund research, and I think fund research will actually become more powerful than building up a track record. I see that something that 100% of our users will be doing. Building up a track record, maybe people will be less, maybe it will target a smaller audience of people that want to build up a track record. But doing fund research is something which is, is a must, I guess, to everyone.
Huh. I have a question about. This shifts the focus from the functionality to more the creation of SharingAlpha. was you wrote a book on behavioral finance. So I'm wondering if that had any effect on the creation of SharingAlpha.
Yeah. I wrote a book over a decade ago, actually. I wrote a book describing different cases in which I encountered irrational behavior amongst investors and traders. As I said, that's my professional background. I kind of summarized it in a book. And I'll send you a copy, but it's it's in Hebrew,
Yeah.
so you have to learn Hebrew first. It's kind of probably the most unuseful language in the world. You can only speak Hebrew in Israel, so I'm not sure you should do that. But there's no doubt that overcoming this kind of behavior, this irrational behavior, is more an art than a science, since there's different biases and it's very difficult to overcome. So people really enjoyed, listening to presentations I made on the book and reading the book. And there's plenty of books now about behavioral finance, and people really enjoyed reading them. But overcoming that behavior is super difficult. And similarly, being able to identify managers that have what it takes to outperform, and especially identifying advisors that can actually add value, is definitely more an art than a science. So it involves quantifying human motivation, rational thinking, all kinds of elements like that, which are very difficult to quantify. And the idea, what we hope to achieve with SharingAlpha is to turn it more into a science. Because what we have today is you have fund selectors running around telling people how great they are, or investment advisors how useful they can be, telling you all kinds of heroic stories of how they identified this fund manager decades ago and they've been holding their funds but nobody can actually measure that. There's no way of actually saying, okay, this is what you're telling me, but is there a third party that actually can approve what you've just told me? Mm-hmm. And the idea of SharingAlpha is to have a kind of a third party recognizing your talent and offering you a chance to build up a proven track record, so people will actually be able to, pay for your services accordingly to your talent. In a similar fashion, the fund managers have a proven track record. They have a fact sheet that they can present, and if it's a successful track record, then they can become, multimillionaires. If it's a fund selector that is very successful in identifying fund managers, then he's left, in the same day job, and he's more like a commodity. Nobody can distinguish him from others. So we think that SharingAlpha is truly a game changer in the global investment management industry, and we're definitely working hard to make it happen.
Does this fit into? So one of the questions I wanted to ask you is about in 2030. So that's 12 years, right? Where will you guys be? It seems like that is the way of turning the art of fund selection into the science of fund selection. Is that where you guys want to be in 2030?
Yeah, I mean, our vision is to offer, it's quite bombastic, it's to offer the investment community a better way of selecting winning funds, and at the same time offer fund selectors and investment advisors the option of building their own proven long-term track record. And we believe it's about time that funds are rated on the basis of parameters that have been proven to work, and fund selectors and investment advisors will be judged according to their ability to add value to investors. And there's no other tool out there that offers these professionals a way of ranking them based on their measurable track record. And since, as I mentioned, since it's so scalable, it also allows a long tail of funds, boutique managers, smaller funds that are managed by maybe large managers, but smaller funds that are not successful in raising assets, to receive a qualitative-based ranking or rating, because the traditional rating agencies only cover a very small number of funds because of their limitations, because they have to pay fund selectors to do the job. Because of the model that we've come up with, the motivation that we offer them, it's much more scalable. So we can offer, the smaller funds, the funds that don't have this qualitative rating, to actually achieve a rating, and that can help them in raising assets from investors. And that's, as I said, moving from a model where fund selectors or fund analysts work in silos to a model, a more centralized approach, or a 2.0 methodology, in which views are shared on a dedicated platform. And you can compare this to something, we're not inventing the wheel, we're just applying it to the fund management industry. It's, traditional encyclopedias were, traditionally created through costly, complex, and difficult to manage supply chains of academic experts and writers. And using a platform model, firms like sites like Wikipedia have built information sources comparable to Britannica in quality and scope, and they leverage on community of external contributors to grow the content. So we certainly believe there's room for this in the fund management industry, where you have over 100,000 products that need to be analyzed on an ongoing basis. The only way to scale to that level and to do that in an ongoing process is to leverage on using a platform.
Yeah. So how do you new funds? You said there's 100,000 funds out there, right? How do you guys put new funds on the platform for fund selectors to rate?
So we've hooked up with Morningstar from day one. So the data regarding funds is provided by Morningstar, all the data that we need for the calculation of the rankings of our users. So any fund that is registered on their database is automatically registered on our database. We didn't have to go out to each one of the fund providers and ask them to supply us with information. We have one data source, which is great. So all the fund providers, all the funds are on SharingAlpha automatically, and people can go, our users can go and select from that huge list of over 100,000 funds. They can select a number of funds they wish to rate in order to build up their track record. It's all up to them. We're not restricting them in any way. They have to come up with names of funds that they have an opinion on, that they have, that they believe that they have an insight in terms of how these funds are going to perform in the future. They can rate them negatively, positively. As long as they're right, they will receive a high ranking. And it solves another issue. I mean, you have a few rating agencies that basically cherry pick a number of funds they wish to rate. They assign fund analysts to rate those funds, and there's plenty of controversy in terms of their business model of whether they're rating funds in order to generate revenue, or is it really genuine? So in our case, we don't decide which funds are going to be rated, and we don't decide obviously how they're going to be rated. It's free from that conflict of interest.
So do fund selectors need to pay to create their track record, or where's the what transactions need to occur? How do you guys make money?
Yeah, good question. I mean, we're not a philanthropy.
So
we
great.
Yeah. So yeah, we're not charging our members anything today, and we won't charge them anything in the future. Now it's recorded, so I have to back it. That's our model. So these professional fund buyers can come onto the platform, build up their track record. Even if they don't want to show off their track record, they can learn from that. They can use SharingAlpha as a learning tool. They can conduct the fund research that I mentioned. That's all free for them to use.
Sure.
The model is based on revenue generated from the fund sellers, the fund providers, the fund managers.
Yeah.
If some of our members want to receive further information about funds, they're able to do that through the platform. They want to conduct further research about funds. And fund providers that want to follow up with these leads pay us a subscription fee.
Got it. Yeah.
So that's how our model works. So it's basically if a member is interested, then one of their salespeople contact them. So we're not abusing the trust that they've given us and giving their contact details. It's only if they've expressed interest in the fund, then they get a call from a sales guy.
It also kind of opens up a great avenue of honesty, because fund managers, they have to, if their fund doesn't perform well, it's open for everybody to see, right?
Yeah, I mean, if it's not performing well, the tools available today show that. But what happens if a fund is not performing well, and there's a very good explanation why that's happening? This enables funds in that case to still receive a high rating because people might say, okay, we understand why the fund has underperformed, and we're still backing it with a high rating. Or if it's a fund that has just been launched and still doesn't have a track record, it could still have a high rating on SharingAlpha because people can say, as I mentioned, we know the fund manager for prior experience. This fund is just is the same strategy as a fund that's been running for a decade in a different legal structure. So they can use common sense to rate it from day one. Other rating agencies normally wait 3 years until they assign a rating. Because of the model that they have in place, they only cover funds which are very large. So it opens up the door to managers which are sometimes smaller or are under some kind of pressure in terms of performance. If your fund is performing really, really well and has a long-term track record and plenty of assets, I'm not sure you need SharingAlpha, to be honest. But that's a very small number of funds. I mean, out of the universe of more than 100,000 funds, the mega funds, the mega funds that are continuing to perform very well, that's less than 10% of the market. Most of the market is the smaller funds, the medium-sized funds, or the larger funds that are not doing well. So they need this kind of platform that can give them, provide users with a rating. And we have funds which are, mega funds with very good track performance and have a mediocre rating on SharingAlpha because people say, well, they've done really well, but now they've reached this size, they have to buy the whole market, they've reached capacity limitations, they're not going to outperform as they've outperformed in the past. So this usage of common sense, simply, is something that is missing in the traditional quantitative ranking or rating, which is very popular amongst a lot of investors. They simply go and say, oh, well, this fund has a top rating, let's go and buy it. But the rating is based on past performance. And the past performance is, sometimes the manager has changed or the manager is not motivated anymore. So the past performance is very tricky. You have to look into the fund much closer in order to assess whether it's still a buy or a hold or a sell or whatever. You need this kind of qualitative layer.
Okay, so I have one final question before I think we can sign off. That the question does not relate to SharingAlpha, but it's more about how you created it again, and it's about your experiences and what type of media. Has any book or documentary, or maybe you took a trip, has that influenced your decision to create the company?
Well, to be honest, as I mentioned, I've got 20 years of experience in the markets. My brother is reaching an age where he's 3 years older than I. He's done plenty of stuff through his career. And we said, let's try and do something which could make a difference. Not just copying other people's idea and trying to improve the service that we provide, but actually coming up with something totally new. So that was something that was kind of our dream. That drives us to actually spend all this time and effort because we wanted to do something which was new, innovative, and global. It has a global reach, and this is what is inspiring us, and in getting us out of bed doing this, and it's really fun. I mean, and I can say that. I visited, spoke before this call, I was just visiting North India, and actually last week I was in Helsinki, and in the airport of both this very small city in India and the airport of that city, and in Helsinki, I saw in the top-selling books a book by an Israeli called *Sapiens*. Noah Harari wrote it. He's an Israeli historian. That his book became number one bestseller across the world. Basically, if you go to Foyle's Bookshop, if you go on to Amazon, everywhere you see this Noah Harari book. He's got 2 books actually. They're both number 1 and number 2 bestsellers, and this is very inspiring because his career, his background is an Israeli historian working for one of the universities here in Israel. That's it. He's not in Silicon Valley. He,
Yeah.
and he managed to conquer the world in his area. So this is very inspiring. This shows that in the world, in this global kind of world, that you can do things and change things without maybe things that were not possible 10 or 20 years ago. So I take that's something that we took, and the second thing that I can say is that you have to enjoy the way, because my experience is shown that not every time you succeed in new ventures and new ideas that you come up with, sometimes things don't work out, and you have to enjoy what you're doing every day, and not just say, okay, when we will sell the company, we will have fun with the money that we will receive. The idea is to enjoy it day by day. It's not always, not as easy to implement. You have ups and downs, but in general, you have to enjoy what you're doing, and see that as a successful thing. Just to have fun building something and going through these, having this BrightTALK, doing things which you've never done is always great, and so far so good.
Awesome. So one final thing, how can people find out more about you and about SharingAlpha?
They can go to sharingalpha.com, check out the website, and they're invited to contact me either by Twitter, LinkedIn, I'd be happy to receive feedback on what people see, what we've done, and if they have any ideas on how to improve things, that would be awesome.
Okay, so speaking of feedback, we have a feedback functionality in BrightTALK. Please rate this webinar. You can also vote for how you liked it, and I've included in the attachment section links to Oren's Twitter and Oren's LinkedIn. So yes, please follow up. Let us know how you like this. And Oren, it's been a pleasure speaking with you.
Same here. Thank you very much.
All right. Bye-bye. Thank you.
Bye.